It was a task so complicated, they knew they needed specialists. 19 professionals chosen by the government, yet 17 of them completely failed. So what about trying technology instead? Maybe AI would have an answer. The result? Researchers reported back that ChatGPT was completely baffled. What was this impossible task? They were all trying to correctly fill out a tax return. If there's one thing that's absolutely consistent throughout American history, it's this. We hate taxes. Okay, sometimes probably a little too much. And look, admittedly, Americans differ on the particulars. Some people want taxes to be lower, some people want them to be higher, but just about everyone wants them to be less confusing. In 2023, 85% of Americans told Pew that they're frustrated by the complexity of the tax system. And it's probably not a coincidence that another poll found 84% of Americans either use tax software or a professional accountant. As for that other 16%, we assume they either are or soon will be in jail. But here's the thing about all this complexity. It comes at a higher cost than you may think. Sure, there's the money we have to fork over for TurboTax or a CPA, and there's the endless hours sorting forms, filling in documents, and reconsidering the merits of anarchism. But because none of us understand the intricacies of the system, including the government's own sources which say no one really knows how big the tax code is, there's another cost. Politicians use our confusion to mislead us about how our tax system really works. And this is true regardless of which side of the political divide you're on. Let's start with the question of who's paying taxes. One argument we hear a lot is that the rich don't pay their fair share. And while you can make up your own mind about what a fair share would be, the numbers here may surprise you. In 2022, the top 50% of earners paid 97% of federal income taxes, and the top 1% alone paid over 40%. That's one of the reasons the OECD, the nonpartisan organization representing 38 advanced economies, concluded that the United States places a bigger chunk of its tax burden on the wealthy than any of them. Which may sound a little confusing, given how often America is compared to Scandinavian countries with more generous programs for things like healthcare, parental leave, and childcare. But here's the trade-off you have to make if you want that lifestyle. Those Scandinavian countries don't just soak the rich. They hit the middle class too. In the United States, you don't hit the top income tax rate until you make a little over $620,000 a year. By contrast, in Denmark, you hit it at the equivalent of a little over $90,000. And that rate is higher than the top rate in the US. If you want European-style benefits, you need European-style taxes, which pinch a lot more people. But there's another wrinkle here. Because America's income tax system is so dependent on the wealthy, we often hear that everyone else is just freeloading off of them. And that's not true either. Because for about 2/3 of Americans, the biggest tax they face isn't the income tax, but the payroll tax, which goes to fund things like Social Security and Medicare. And sure, you can say that that's money they'll get back decades in the future, but it's still money they don't have today. Moreover, the payroll tax works in exactly the opposite fashion of the income tax. It actually places the highest burden on the people making the least. You only pay Social Security taxes up to a certain point of income, about $175,000 in 2025. After that, the rate drops to zero, which means lower-income workers end up paying a larger share of their wages than the wealthy. How does this play out in the real world? In 2019, the Tax Foundation estimated that someone making between $30,000 and $40,000 a year would end up paying 8.8% of their income to the payroll tax. Meanwhile, someone earning between $500,000 and $1 million would only pay about 5%. So the income tax disproportionately burdens the wealthy, the payroll tax disproportionately burdens the low income, and the politicians emphasize whichever of those is convenient for them in the moment. Which by the way, is also what they do when they talk about who's benefiting from taxes. Everywhere you look, for instance, politicians complain about what they call tax loopholes for billionaires, for energy companies, for industries they don't like. But here's the thing about these loopholes: they usually don't exist, at least not the way that politicians describe them. Most of these loopholes are perfectly legal tools, things like tax deductions, tax credits, or tax deferrals that were put in the tax code by Congress to benefit the recipients. And there are so many of them that in 2020, they were estimated to be worth $1.5 trillion a year. So for politicians, it's a tax break if it goes to your friends, and a loophole if it goes to your enemies. Another common complaint is that some states send more money to Washington than they receive back in benefits, which is an especially common complaint from politicians representing large states like California, Texas, or New York. And they're right about this. But it's also meaningless. States don't pay taxes. The people in them do. And when money flows back, it flows to people. That's why a state like Virginia looks like a big beneficiary. It has tons of federal employees whose salaries are paid by the government. And it's also why states like Mississippi, Louisiana, or New Mexico receive more than they pay in. They have some of the nation's highest poverty rates. And as a result, more residents qualifying for programs like Medicaid, welfare, and disability benefits. Finally, there's the biggest misconception of all, that your tax burden is determined entirely by your tax rates. It isn't. If you really want to know what you're on the hook for, you need to look at how much the government spends, not just how much it collects, because all of that spending eventually has to be paid for. At the end of 2025, the federal government's debt stood at over $38 trillion. We now spend over $2.6 billion a day on interest payments alone. And if you divided up the debt equally, every single American would get a bill for more than $112,000. Which means politicians can promise you low taxes all they want, but if they don't cut spending, all they're really doing is postponing the bill and ensuring that it'll be bigger when it arrives. Bottom line, when a politician tells you a simple, reassuring story about taxes, it's probably not the whole truth. So, at the very least, be more skeptical. And at the very most, you know what? Let's stop short of the very most.